Welcome to Facts Not Forecast, your daily edge in the stock market, facts, insights, and opportunities you won't hear anywhere else. This is the second deep dive in our series, Building Your Portfolio the ARK Way. Each week, we analyze Cathie Wood's latest trades, what ARK is trimming, what it's doubling down on, and what key insights you can take to sharpen your own portfolio without paying those fund fees.
And look, this week's source material, it really reveals a very decisive reallocation of capital. We're seeing a clear pivot.
A pivot away from
those high momentum sort of speculative trades and a really forceful move back into deep science.
Right.
Particularly the genomic editing sector.
Right. That's the mission today. Our sources confirm that this week, ARK significantly trimmed their exposure to OKLO and KTOS and then increased their holdings in Biotech. We're talking CRSP, Beam, NTLA, and RCT. So hold on a second. Why ditch stocks that have seen, astronomical gains? One was up over 1,100%.
Yeah, incredible number.
And move into a sector where their key holding is currently losing, nearly $500 million a year? That feels like a big swing.
It is a big swing.
Out of defense and nuclear hype, straight back into, arguably the most expensive science on the planet. To understand this, I think we need to look at the reasoning behind the sells first.
Exactly.
And then really focus heavily on their biggest conviction buy, which seems to be CRISPR Therapeutics, or CRSP.
Well, I wouldn't call it just a flight from risk. It seems more like a rational flight from overvaluation. ARK looks like they're prioritizing capital allocation for the long term here. When you look at the trims, they were selling positions that had just run really far, really fast, maybe exceeding even optimistic near-term forecasts.
Like Kratos, KTOS.
Exactly. Take Kratos Defense, KTOS.
Yeah.
This stock had massive momentum. It increased almost 300% over the last year. That's huge.
Huge gain.
But the critical data point we extracted, the really key thing, is that its recent trading price, around $91.37, was actually trading above the current analyst maximum target estimate. That was $90.
So they saw it hit the ceiling, maybe even punch through it?
Precisely. ARK saw a fully valued position, maybe even overvalued by some metrics, and they took the profit. That's just smart portfolio management, really.
Okay, that makes sense for KTOS. But then you have OKLO Inc., OKLO. That seems like an entirely different beast, pure speculation.
Absolutely. OKLO is, pretty much the epitome of high risk right now. It's a microreactor development company, super volatile. Its beta is 2.74.
Wow, 2.74. So just for context, a beta that high means the stock is expected to swing nearly 3 times as hard as the overall market, right?
That's right. Huge swings.
And despite that staggering volatility, they've got a market cap around $17 billion, built entirely on future potential, the hype around nuclear.
But here's the kicker, as you said.
Zero revenue.
They currently report exactly $0 in annual operating revenue. Zero.
Okay.
So while the stock soared over 1,100% in the last year, based purely on the promise of future tech, the reality is, verifiable operating revenue. That won't materialize for years.
So the move here was basically a rational decision. Get out of maximum speculation, cut exposure to that extreme volatility.
And reallocate that capital.
Yeah, right.
Put it into companies that are actually executing, even if that execution costs them, dearly in the short term.
Right. So if they're exiting pure speculation, taking profits on these high flyers, where's the cash going? You said deep science.
The next generation of medicine, clearly. And it's not just a vague pivot into general biotech. It seems like a high-conviction focus on specific breakthrough technologies.
Like genomic editing and messenger RNA, mRNA platforms?
That's the pattern we see emerging. We have increased exposure across a whole basket of names in this specific niche. It signals a broad commitment to the sector.
Okay, like which ones?
Well, one of the names we saw increased buying in was Arcturus Therapeutics, ARCT.
And ARCT actually provides some pretty immediate validation for this kind of shift, doesn't it? Didn't they just report really strong earnings?
They did. A massive earnings surprise. ARCT beat EPS expectations by nearly 62%, and their reported revenue, $28.3 million, it just crushed the $18.8 million estimate.
Okay, see, that's critical. Unlike OKLO with its zero revenue,
Right.
ARCT is hitting tangible milestones. They're demonstrating commercial progress, or at least, highly successful clinical progress that translates into immediate revenue somehow.
That is exactly what you want to see when you're transitioning capital from speculation to execution.
Yeah. Even though ARCT is still highly volatile itself, beta of 2.40, quite high.
Still high, yeah.
That revenue surprise shows they are executing. And we should probably mention the other gene editing names where they increased exposure, just to show the diversification within the theme.
Exactly. We also see increased buying in Intellia Therapeutics, NTLA. That one's recently seen a pretty significant jump, actually, gaining almost 49% in the last month alone.
Wow, okay. So ARK is sensing a turning point there, perhaps. And we also have to acknowledge Beam Therapeutics. They also saw increased exposure, which really reinforces that ARCT is building a broad foundation in this whole gene editing space, not just betting on one horse.
But the biggest allocation, the one that really feels like the core of their future trade here, is CRISPR Therapeutics, CRSP.
Definitely.
If we're looking for a shortcut to understanding ARK's thesis right now, this is probably it. And here's where it gets really interesting, I think, because the investment in CRSP presents this fascinating financial paradox.
It really does. It's a perfect case study in contrasting financials. Well, on one hand, CRSP has an absolutely rock-solid balance sheet, which is frankly non-negotiable for deep technology development like this.
Rock solid how?
They report a staggering $1.7 billion in cash on hand.
Let me just stop you there. $1.7 billion in cash.
Billion, yes. And critically, zero debt. A 0% debt-to-equity ratio.
Zero debt. Okay, that's impressive. That's right. Their current assets, that $1.7 billion, it comfortably exceeds all their short and long-term liabilities. You can basically think of that cash cushion as a huge de-risking mechanism.
Right.
I mean, drug development is messy, it's costly, it takes a decade, sometimes more. This company has the financial stability, the fuel, really to fly across that entire R&D ocean, even if the flight plan has to be adjusted, several times along the way.
So you're buying stability, you're buying that financial cushion to survive the long, messy journey. Okay, but here's the paradox you mentioned. If they're so financially stable, why are they currently losing money hand over fist?
Because that's the cost of revolutionizing medicine. It's incredibly expensive. The company is currently highly unprofitable. We're talking a trailing 12-month net loss of nearly $500 million, $467.8 million to be precise. And the gross margin, well, it's a startling negative 1,000% margin. That sounds catastrophic if you're thinking about a normal business.
It does. Can you just explain that figure simply? Why so negative?
Sure. Basically, it means that the cost to research, develop, and produce their few commercially viable products, like their big approved therapy, CSGV is currently 10 times higher than the revenue those products are bringing in right now.
10 times higher?
Yeah. The revenue stream is still just a trickle, really. They're at the very, very beginning of the commercialization phase for CSGVY, but they have to maintain this massive R&D infrastructure, the staff, everything, and that drives that cost structure sky high.
And analysts expect this to continue.
Yeah. Analysts are forecasting these heavy losses will likely continue through at least 2027.
Okay. So ARK and anyone buying in is essentially buying a promise. A huge promise, backed by a massive cash cushion, yes, but a promise that requires extreme patience and a high tolerance for short-term financial pain.
Absolutely, that sums it up well. But investors, like ARK, are betting that the growth rate will eventually just overwhelm that current cost structure.
What are the growth projections looking like?
They're big. Revenue is forecast to grow significantly, over 60% per year. And EPS, earnings per share, is expected to grow nearly 48% annually.
Okay. That is an exponential kind of outlook. If, and it's a big if, the commercialization curve really hits its stride.
Exactly. It's all about execution from here.
And the market generally seems to believe in that long-term story. What are analysts saying?
Well, the analyst consensus rating is overweight. That signals pretty strong conviction generally, and the average 12-month price target is around $78.48.
Right, and it's trading around $64.81 now, so that suggests maybe it's at a discount relative to that average target.
It does suggest that. But, and here is where we really need to address the uncertainty and the risk.
Okay.
Look at the price target range itself. It spans from a low of $32 all the way up to $268.
Wait, $32 to $268, that is a colossal gap.
Huge gap.
Isn't that kind of volatility and extreme uncertainty just as risky as holding something like OKLO, just disguised by a better balance sheet? That range suggests almost zero consensus on the true value.
It does reflect massive uncertainty, you're right. But it also reflects the potential, the revolutionary multi-bagger upside that comes with successful gene editing commercialization, if they pull it off.
Fair enough.
And look, the conviction isn't just coming from ARK. We are seeing strong institutional support building too. SR1 Capital Management LP, for example, made a significant $51.5 million purchase back in July.
Okay, that's serious money.
It is. And that was alongside some recent board member buys, too. So it suggests sophisticated capital is also viewing this current valuation, this price level, as maybe an accumulation phase.
That leads us right into the entry point discussion then. ARK is buying a high volatility stock, beta 1.81, still pretty jumpy.
Yeah, definitely high volume.
That has spent the last few years basically consolidating after a massive run-up and fall.
Yes. That volatility is just baked into these kinds of names right now. And you have to look at the history. CRSP hit its all-time high. What was it? $220.20 back in early 2021.
Right, peak biotech bubble enthusiasm.
Exactly. So while it's up over 42% in the last year, which is good, it's still down over 26% from those highs. This recent buying by ARK is happening after a significant multi-year phase of consolidation.
Right, and the technical picture kind of supports that idea too, doesn't it? That this might be a strategic entry point after that consolidation.
It does seem to. Currently, the price is trading above some key short-term moving averages, specifically the 50-day simple moving average, which is around $57.82, and the 200-day SMA at $45.96.
So trading above those levels is generally seen as positive momentum.
Yes, the short-term technical analysis is actually signaling a strong buy right now, which indicates ARK might be leveraging a period of renewed momentum following that long period of price discovery and consolidation. They seem to be buying validation, maybe, not desperation.
Okay, so pulling this all together, what does this mean for you, the listener? The data we've looked at clearly suggests ARK is shifting capital. They're moving away from pure speculative momentum plays.
Like the zero-revenue OKLO.
And the technically overbought KTOS. And they're moving into these long-term, cash-rich pioneers like CRSP and RCT. Companies that are actually executing on fundamental technological breakthroughs, even though they're running huge short-term losses to do it.
And if we connect this to the sort of bigger picture, this transition really signals a profound confidence, I think. A confidence that the next major market cycle might be driven by these fundamental technological breakthroughs, following the AI boom we've seen over the last few years.
A new driver for growth.
Potentially. And the key point here, the real linchpin, is Cas-JVY. That's the first FDA-approved CRISPR therapy. That's not just a clinical win, that is commercial proof, it's tangible.
It moves gene editing out of the lab into the marketplace.
Exactly. It's moving gene editing out of pure R&D and into actual revenue-generating healthcare. And that transition, that proof point, is what justifies holding these companies despite the ugly negative margins right now, because they are positioned potentially to capture the exponential future of medicine.
That definitely raises an important question for everyone listening. Would you follow ARK's move here? Do you believe in biotech to be the next big growth sector after AI? Let us know in the comments.
Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.